Accrual and Matching Concepts Learning Quiz. 6 questions to test your understanding of accrual and matching concepts. Give a definition of the accrual principle. One definition could be revenue should be recognized when earned, irrespective of when paid for. Expenses should be recognized when incurred, irrespective of when paid for. Define the 2 principal conditions which must be met for companies to be able to recognize revenue under IFRS. The first condition is that economic benefits and risks from ownership must have been transferred from the seller to the buyer. And the second condition is that the revenue and associated costs can be measured reliably. Give 2 further conditions that must be met to allow revenue recognition in the case of physical goods. And the first is that the goods must have been delivered, and the second is that legal ownership, including any title if there is one, must have been transferred from seller to buyer. Explain how the matching principle is applied to direct product costs, taken through cost of sales, and head office overheads, taken through other expenses. Direct product costs, costs associated with the revenues, should be recognized in the same periods in which the revenues are earned. And for head office expenses must be recognized in the period in which the benefits from the service or goods received are consumed. Explain what each of the following 3 items represents and how they arise: unearned income, prepaid expenses, and accrued expenses. Unearned or deferred income. This is the liability created when a firm receives payment in advance from a customer for a service that the firm will deliver in the future. Prepaid expenses. This is the asset created when a firm makes payment in advance for a service to a supplier that the supplier will deliver in the future. The other side to unearned income. And finally, accrued expenses. This is the liability created when a firm consumes a service for which it has not yet been invoiced for by a supplier. And those are the questions that we've looked at.